Hart Energy's Premium Blend Series presents exclusive interviews about the oil and gas sector with the industry's best managers and analysts.
It's amazing to me the transformation of the industry. I mean, the notion that you've gone from a world where scarcity was really the underlying precept, principle, whatever you want to call it, behind investments and development of the industry and politics, energy-related politics, to an era where we have too much of the stuff, and that's just that's a very mind-boggling is the best way to put it, kind of change, and to happen in essentially a 10-year period, less than 10-year period. I don't think the market has completely caught up to that yet. I know the political world hasn't, and I think there's going to be a lot of difficulty globally that results from it, and it's a pretty interesting but a little bit scary future ahead of us. I have a hard time getting an expectation that's over 40 by the end of the year, and that's simply because I think the oil problem is fundamentally a demand problem. It's not a supply problem, and it looks like demand is falling off everywhere. Now, if you get a whole bunch of printing of another QE out of the U.S. or China devalues, there's a lot of things that could happen economically that would change that and drive the price a little bit higher as a result. But I think somewhere in the low 40s probably is where it'll be at the end of the year. Next year it'll go up another $5 to $10, but I don't think it gets much over 60, 65. It is very high by the end of the decade. And the simple reason is we can produce too much once you get over 50 for the price to go up. So that puts pressure, because as I said before, $50 crude won't clear the gas market. So the gas prices are very low now. We expect them to get a lot lower in the spring because we've just got too much gas in storage. Hopefully it'll be a hot summer, and we'll use some of that up in the power market, and then it'll be a cold winter next year. The gas price is fundamentally and almost exclusively at this point a function of weather. If we have cold weather next winter, or a return to just a normal winter, you'll probably see gas prices rise a little bit. But even there, we're looking at $3 to $3.50. Maybe by the end of the decade you get to $4. But the slides I had in my presentation where I was talking about the improvement of basis in the Marcellus will bring on incremental production in the Marcellus area. My hunch is that dynamic keeps the price increase in the $3.25, $3.50 range. I don't think it has to go all the way to $4. You can hear what we've said and say, this, you might as well just jump off a cliff. And really, that's not the reality. I mean, I think what you're beginning to see is the industry respond. The prices have come down. Some producers in some areas, and the Utica Marcellus is a great area in this regard, have a cost structure and have a geological base with which to produce at a profit and make a reasonable return. Is it a return that was typical of 10 years ago? No, but very few industries have that kind of a return. But when you look at the risk and everything else, it's not that bad. And I think that you'll see a shakeout where what's left in 5 years is a much smaller, probably much more stable, and a reasonable return associated with the commodities. And so in many ways, this is a growing exercise, a lot of growing pain, but in the end, it'll probably be a better industry. And it'll certainly look different, that's for sure. But I don't think it's all negative. In many ways, I think this is a positive thing to have to go through. It kind of cleans a lot of the malinvestment out of the system, and that's a healthy thing to do periodically.
To learn more about this topic and others, check out this month's print edition or the daily updates on this website.